Welcome back. Good Tuesday morning, everybody. Thanks so much for joining us this morning. I hope you're having a good Tuesday morning. I'm Maria Bartiromo, and it is Tuesday, June 24th. It is 8 a.m. on the button. 8 a.m. on the button on the East Coast. The geopolitical story taking center stage this morning. President Trump is now en route to the Netherlands to attend the NATO summit. This after the president brokered an historic ceasefire between Iran and Israel. The markets have been trading higher since the United States took out the nuclear sites in Iran on Saturday night. Right now, the Dow Industrial's up almost 300. Joining me now in a Fox Business exclusive is the chairman and CEO of Bank of America, Brian Moynihan, with us. Brian, great to see you.
It's great to be here again, Marie.
Thank you so much for joining us this morning. And I want to get your take first. You've got probably the best read on the consumer out there. So I want to get your take on what's going on in the macroeconomic story. But first, how do you assess these geopolitical headlines? Has there been an impact in terms of business from your standpoint?
Well, I think it was a pretty quick back and forth over the last couple of weeks. But I think the market loves resolution and potentially had a strong resolution over the last 72 hours, which I think the market's reacting to favorably. Oil went up and came back down. And so I think, the worry about the Middle East is the geopolitical worry, but also the effect on oil prices, and it's settled back down. So that would be good for the American consumer ultimately because they get the benefit of that as well as consumers around the world. So
maybe that's why markets are trading up. Look, you've got such an incredible reach at Bank of America from the consumer business to the commercial traditional lending, as well as investment banking, wealth management. There is going to be this wealth transfer, right, from generation to the next generation. And it seems that Bank of America is very well poised to capture that transfer. How do you see things over the next 10 years in terms of that wealth transfer that is happening from one generation to the next?
Well, there are two parts to that. One is there is a lot of money that's going to move. The value creation by the great American economy and the capitalism and the kind of capitalism practice in America created a lot of value. And it's resident in people of my age and older that will be transferred to their children. But interesting, there's a period of transition between that, which is just by natural way things work. A lot of women are going to inherit a lot of money from the family, whether they're a primary earner or not, because at the end of the day, they outlive men. And so there's going to be an interesting transition our private bank tries to keep track of, which is the transition to women and then ultimately the transition to the kids. So it's going to be an interesting dialogue.
I love that.
Yeah,
that
you would.
Women are going to inherit all of this money. We're living longer, you're right, typically for men. And that's something that you have to think about.
Exactly. Running
Bank of America. How do you capture that money? So give us, given your scale at B of A, give us your sense of the consumer right now. Sure. I know the last time you gave us the snapshot, you saw that younger people were basically going, buy now, pay later. But what are you seeing today in the consumer, Brian?
So if you start from the macro, the unemployment rate's still 4.1, 4.2%, which means people are earning. The wage growth is still 3% or so, which is people are growing their wages. And you look in our business, they're continuing to spend. And so despite the confidence surveys and said, American consumers were quitting and not aggressive at things, they kept spending all the way through that. And right now they're spending at 4.5% over last year's June, year to date, 5%. And that is more consistent with a 3% growth economy than what we have predicted in our company is about a 1% growth economy. That'll come into sync as the tariffs hopefully get resolved and things like that. We can talk more about that. But the consumer's in good shape. Their credit quality's in good shape. Their money's in their accounts. But as student loans restart, there's a little more draw on it. They paid more taxes this year, believe it or not, broad-based consumers. And so they're pretty much at equilibrium now. We just have to watch, really have to watch unemployment right now. That's okay.
And do you have the scope of who's spending what? I mean, you see, I go to Walmart, I spend money on my Bank of America credit card. You know exactly what I bought. I mean, you've got such data and detail. So can you break it down from the high earners to the low FICO score earners? Who's spending more and what are they doing?
So if you look at what's going on, one of the interesting trends, just to spot out stuff, is there's a movement to travel more domestically than abroad just because of all the discussion that's gone on. And so that means local bookings and miles driven and over the holidays was strong, and that means local hotels and stuff. Cruises are picking back up. If you look at the other things kind of interesting, the amount spent on AI subscriptions is up 100 and some percent over year. So
wow,
you're seeing more
AI
and more.
subscriptions.
Yeah, and so they're charging the credit card or whatever. And so you're seeing that happen more and more. So that shows you the power of AI being democratized democratized. Over 1 million of our customers are paying a monthly payment into the AI structure. People are going to movies more. The movies out are good, 100% up over last year. People are still eating out, a couple percent points growth year over year. And so when you hear of different companies, some may be winning in a brand of their battle, their brand or their offering. Some may be losing, but in the aggregate, you're seeing that spending pretty constructive, which is good news, and I think provides a good anchor to windward against any possibility of recession. And our team has no recession predicted. They think, yes, the economy will slow down as the drag on rates and tariffs and inflation continues to get in control. The Fed will cut rates really next year. Our team's a little more conservative on that because they believe it'll take longer for inflation. But in the end of the day, they don't believe there's a recession, which means that this could all sort of work through the soft landing, no landing, all the debate that's gone on. It looks like we're getting through it.
So, I mean, you're really capturing that. It really strikes me that people are spending money on AI subscriptions. I mean, it makes perfect sense, and I love that you've got that kind of detail. You're capturing that. What do you spend, like $13 billion on technology every year?
Yeah, we do. We spend at a different level than the consumer, but
of course,
our job is to apply technology, and about $13 billion in total, and a lot of it goes into new applications or new code being developed, and we're finding AI impacting that in terms of efficiency of our developers even. And so we're spending a lot of money in AI around multiple dimensions. One is how people work. Two, you can go after types of work that have never been gone after, the preparation of pitch books, the things that typically were really the purview of an individual looking at a bunch of data. The third thing is in computer coding, we can save, we think about 10 to 15%. We have 18,000 programmers today, coders, using the AI techniques. We've seen them save 10, 20% of their time on the coding effort. That's very strong. And then we're seeing it in Erica, 20 million people using it, 200 million times a quarter, 3 billion interactions since we started with Erica. And we keep increasing its ability to help consumers, but now business customers. 50% of all the interactions our business customers are going through Erica to get resolved. And then even our employees, if you want to screwed up your password and you have to fix it, you can go to Erica and fix it.
I like that girl, Erica. Yeah, she's she's the woman on the other side of everything, and her voice is always a friend. Okay, let me move on to investment banking, because here we've seen mixed, right? I mean, you suggested in your last quarter that investment banking activity will likely be down or sort of, flat. We saw a couple of IPOs recently, a couple of deals. How would you assess it? What are you expecting second half?
I think on the commercial side, whether it's small businesses or companies going public or deals getting done, this certainty around tariffs has to set in. Now, the advice that when I was asked early on talking to the administration was get deals done, some deals, and then people can pattern other deals off them. So if you get a deal done with country X, they'll look at all the countries that kind of look like X and say, we ought to get there. And so I think you're seeing those fall in place, the UK agreement and other agreements out there. That's important because if you're trying to buy a company, you have to think about its revenue stream and profit stream. That's what you're discounting. And so if you think about that, it's important to them. If you think about it in terms of IPOs, same thing. There has to be some market certainty. The good news is you're starting to see them get through. So this quarter's weaker, but the pipeline is very full. It's kind of an odd thing. You have the strongest pipeline, but this quarter's a little weaker. And we said 1.2 billion in revenue, which is still not a significant amount of revenue for the quarter, but it's a little bit down, largely due to the hesitation from Liberation. This quarter opened with Liberation Day is ending with a war being resolved, potentially. That's kind of a wild quarter when you think about it.
Yeah, I mean, it came all the way back, the markets, from all that upset over Liberation Day tariffs. But it sounds to me that you still believe that we're lacking clarity. You need the clarity on tariffs. You need to see businesses have clarity so that they could put their investment dollars to work.
Yeah, and I think, I'm speaking what I hear from clients. What clients want is to say, if I can get clarity, I can then move forward in my business plans. And so think of the world of business managers in America going through their strategic planning cycle as we move into the fall, through the summer and the fall. Clarity around tariffs and trade policy, clarity around the tax bill getting through in a form that extends the tax benefits. All those are very good things. And as that happens, I think you'll see a pickup in the economy. Right now, the higher interest rates and that lack of clarity is slowing down. But look, they're trying to resolve a series of issues, and that it takes a little time. These are hard things to do. Nobody should discount that. There's a lot of negotiation. You talk to Secretary Lutnick or Secretary Bassan or their teams working for them. There's a lot of work going on, and the trade representative, there's just a lot going on. So they have to solve that. Businesses don't like uncertainty, and they'll always say that's an excuse. Some it's real, some it's not real, but that's what we hear from our clients.
And I keep hearing from them, China is tough. China is tough. Is the most important deal that you need to see get done China, or is it the European Union? What do you think is most important in terms of the deal that you want to see announced soon?
I think supply chain, obviously, it's still China because just the reliance on that. On selling goods out, there's a little bit more Europe dependent, UK dependent in other areas. But look, the world doesn't need perfection. What they need is enough certainty that makes it clear that they could potentially, they can see the outlines. If it's tariffs won't be above X, they'll adjust their business models and go through with that. That's what they need.
I want to ask you about regulation and some of the things that you just touched on, like the Big Beautiful Bill, because within the Big Beautiful Bill, there are things like remittances and Section 899, and all these other things that impact the banks and small business as well, like lawyers, accountants, etc. I'll get to Mickey Bowman and the Fed in a second, and Jay Powell, but your thoughts on what do you want to see in terms of policy in this Big Beautiful Bill that will be important to accelerate growth for your sector and the broad economy?
Well, I think the number one thing is to actually extend the tax rates, because what people are losing the context is these tax rates were meant to get the U.S. competitive on taxes for corporations, so that they weren't remember back to people were exporting business outside the United States for lower tax rate reasons. They were doing a lot of things, inversions and all the stuff we talked about. All that's been gone for the last 7, 8 years. And so we need to make sure these extend, or else that will start up again. And so, that's the number one thing. In there, the 899, a lot of things, there's a lot of pieces of policy and things like that will get reconciled through the process. We'll see what comes out the other end. But I think the number one thing is clarity that they're going to extend the taxes. Then after we get that done, we have to deal with the debt levels. And everybody knows that. But you want to kind of put to bed a baseline, and then you can go to work on trying to reduce that aggregate amount of debt relative to the economy and stuff. No one denies that we've got to work on that. Is that a potential issue for the U.S.? Absolutely. Have we reached levels we shouldn't? The downgrade? Yes. And they have to work on it. But I think you have to sort of set a baseline, and then you can go to work on improving it.
As a business, as someone talking to your clients all the time, is this a front center issue? Getting those tax rates extended, ensuring they get this bill over the finish line?
Well, there's an assumption they'll be extended so much, though, that if it didn't get extended, it would be a real shock to the system, and that's what everybody's working to avoid. On the debt, the interesting thing is that debt is more of a front and center topic in America today. Here on 6th Avenue, there's a debt calculator that you probably drove by hundreds and hundreds of times and never really paid attention to. Now it's front and center because the levels have gotten to where there's more concern among bipartisan and things like that. So that's why I think there's hope. Back in about 10 to 12 years ago, there was a bipartisan commission to try to figure out how to solve this. I think you could see efforts to push through some way to manage this more effectively. But I'd say that the taxes really, everybody's assuming to get through. It would be real shock to the system if they don't. So I think that's the number one thing, just to take away that tail risk of it not being extended.
Totally understand. Yeah, I mean, you got to get clarity, again, whether it be clarity on tariffs, clarity on the Big Beautiful Bill. This is what it takes to move the needle on growth, and for the confidence that businesses need to have to say, all right, I'm going to make this long-term investment. I'm going to put money to work. Brian, there's an article in the Journal today. You probably saw it. Big banks worried about being Trump's next target. Race to appease Republicans. That you and colleagues in the business are trying to get out of the crosshairs of Republican states cracking down on woke policies. Debanking gun manufacturers or fossil fuel extraction companies. What do you think?
Well, I think even within states, you have various points of view of these things, and we work with all of them and try to help them figure it out. At the end of the day is we do what our clients need us to do, and we bank all kinds of clients. So a week ago, we got criticized for being one of the largest oil and gas financiers, and then you get a letter like this. So the reality is we do what the clients need us to do. We believe the energy policy has to be across all sectors. So we believe that you have to have strong energy, a strong available energy, a good price, but also we have to work on emissions. So we're working with clients. We help them do it, whether it's big oil and gas companies, whether it's a big hyperscalers and people like that. So we just keep pushing on that. So we'll work through with all these states. There's a lot of nuance to it. There's equal and opposite on the other side of the aisle, so to speak, coming at us the other way. At the end of the day, is we want to be outside this thing. We've been around for 250 years in our company since George Washington was president. So, we've been through this, but we're saying, let us just work with our clients. You guys figure out the policy.
And you've got 200,000 plus employees working on that as well. Look, we had Paul Atkins on the other day, the new chairman of the Securities and Exchange Commission. He told us a little about his priorities, including getting more IPOs to America and what he wants to do on crypto. Here's what he said. Watch.
What we're going to be doing is focusing on making rules of the road understandable and clear for people. And one of those areas is digital assets, cryptocurrencies and whatnot. And so we're working with our counterparts on the Hill and in the White House and at the Commodity Futures Trading Commission to do just that, getting the rules of the road in the digital asset space clear and for innovation to go forward here in the United States. It's been stymied for too long. And we're focusing on capital formation, the IPO markets, and have been have not been as robust as they have been, say, 20 or more years ago. And that's again because of many issues, regulation, and litigation issues, and that sort of thing have discouraged people from going into the markets.
So we sort of knew a little of his agenda, but the Genius Act obviously was passed the Senate. We're waiting on the Clarity Act, a similar proposal in the House. What is the impact on stablecoin legislation to B of A?
So on the stable coins, the end of the day is if it becomes a currency, the payment system, we'll have to participate as a company in the industry in that. And we've got blockchain patents and we've got work done and we're working with the other industry participants because if our clients need it, we need it. The question is how big an industry will be, how much will go over there is an interesting question. And also then what are the rules around the operation of it? And so I think the Market Structure Act behind the Stablecoin Act in the House and stuff will add some clarity to that. But we need a set of rules because right now we are subject to each, in the prior administration, we were subject to each banking regulator's interpretation of what we could do or not do, which held back the mainstream financial system's innovation power here. We've innovated, we just didn't bring it to market. Now we will if this becomes a law that has clarity to it.
Are you going to do your own coin with other banks?
Well, my guess is it'll be industry-wide solutions just because the network effect of this is critical. And we'll partner with these companies. We already are partners with some of them. So the idea of moving money in smart contracts and things like that, the potential of cross-border payments, there are things where we can see the business case better than other places. But at the end of the day, remember, we move 90+% of our money moves digitally. Even on the consumer side, 60% of it moves digitally on a given day. $3 trillion a day goes out of our company. So we believe in digital movement of money. That's not a new concept.
And Zelle is working really well, by the way.
Zelle's up to 3 times Venmo in size.
Yeah,
and, everybody
exactly.
said, if I were here 7, 8 years ago, you said you guys don't know anything because you don't have a Venmo type of thing. And here we are at Bank of America, our Zelle payments exceed the size of Venmo.
Right, we got to jump, but real quick, are you expecting anything from Jay Powell today and tomorrow on the Hill?
I think he'll talk about inflation being the concern and how to judge all this change, and that's what he said he'll talk about. I'm sure he'll talk about it. Our view is they still are wrestling inflation down, but it's working its way down. It's just inflation's always harder to get out of the system. The team that informs me when we all thought it would happen in 4 quarters said, no, this takes 3 years just because it takes to grind those excesses out of the system a long time.
Brian, it's great to have you this morning.
It's good to be here.
Thank you so much. Brian Moynihan is the chairman and CEO of Bank of America.